Morning, glad you're here. It's 8:41 now, 19 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. Hey, you got that? Good. There's a quiz later. Time to check in with Phillip Statler, who is back at Statler Financial Services in downtown Sebring to see what's going on with your money this morning. Phillip, how you doing? And welcome back.
Hey, good morning, Dave. I am glad to be back from a little R&R, and well, the market seemed to do well while I was gone last week, hitting some record highs again to close out the second quarter.
No, I did my best to talk him up while you were gone, and I think we succeeded so far. Yesterday, the Dow was up 275.5, and that was not the record setter of the bunch because we still got about 1,000 to go, I think, before we hit our record high there. Standard & Poor's, though, another all-time record, up 31 plus. And the NASDAQ now at 20,369.73, up 96 bucks yesterday. Both the S&P and the NASDAQ up the better part, or a little over 0.5% in a day. Boy, you could start playing that band, Happy Days Are Here Again. All our problems are done, aren't they?
Well, at least yesterday.
For a day or two, anyway. Yeah, it's amazing to me that the euphoria has gone that far. Number one, we've got the bloodbath going on right now with the big, beautiful bill. The Senate is adding junk and deleting stuff out of that, which means it's going to go back to the House, and it's not going to have a prayer of getting passed there. And then we still got that looming July 9th deadline that the president had put out about all those confiscatory tariffs for people that didn't come to his hat in hand to negotiate a side trade deal. I mean, nothing's really changed, but all of a sudden the equity markets are, happier than a pig in slop. I'm not 100% sure I understand the euphoria. Even my fear and greed index is up on the upper reaches of greed right now.
Well, I think that's the way it usually goes, Dave. As the markets continue to move higher, FOMO the fear of missing out starts to kick in. It's like, oh, I need to jump in now. I'm at a new high. Well, that's not always the best time to jump in. It's not always the worst time either. You have to look at everything in a whole bubble to determine if now's the right time and if the portfolio you're getting into is the right one, right? Because you could be in a defensive portfolio and be in a good spot right now. You could be in a growth portfolio and maybe you don't want to throw more money in. There's a lot of things that go into deciding when to get in and when to get out of the market and what kind of portfolio to be using.
Your point's very well made. One of the things that I came up with earlier in the week was the notion of the Magnificent Seven, all the darlings of the market over the last year or so, talking about how those big tech, high-tech stocks had pretty much led the market up last year. Well, the biggest winners of the first half of 2025, I got 2, 4, 6, the top 10 winners in the Standard & Poor's 500 in 2025, not one single member of the Magnificent Seven was in there. I mean, it's a lot of tech on it, don't get me wrong. But the stock pickers that just said, put all your money on the big high-tech Magnificent Seven stocks and you'll be fine. I mean, they aren't losing money this year, but they're nowhere near the biggest gainers. So if you're into growth stocks, it takes a little deeper look than probably is something you needed to do all year last year.
Well, yeah, it is. And that's one of the things, we're always tweaking what we're doing to kind of drive the results that we can get. And so that's one of the things is it's not just set it and forget it. That's that used to work, but not so much anymore.
That's absolutely true. It's going to be kind of a crazy week after a reasonably quiet day today as far as government data stuff is concerned. Today, primarily, I suspect we're going to be trading on the value of the companies that are out there. But starting tomorrow, we've got the ADP employment report. And then on Thursday morning, they pretty much dump everything that they'd normally give us on Thursday and Friday on Thursday morning, July 4th, of course, being Independence Day, and then give everybody a half a day to trade on it because the market will close at 1 o'clock on Thursday afternoon. So it's a reasonably peaceful day today with just one employment number coming out, and that's the JOLTS report. And given the slowdown that we're seeing in employment, I got to believe that's going to be a little bit bigger market mover than it normally is. Wouldn't you tend to think that way?
It could be. The other thing that comes out, though, I mean, there's a couple things. You got the JOLTS report as far as earning or jobs coming out, but you also have construction spending coming out at 10 as well. Between that and the JOLTS report, I think we could see some moves there, as well as, your friend, Jerome is going to be speaking today. So at 9:30. So that could have an impact as well.
Oh, that's right. He just got a handwritten note from President Trump yesterday urging him to please cut interest rates. And I'm sure he was thrilled to get that handwritten note. Don't you agree?
I bet he was. But I am seeing a little bit more trending now in the headlines of, we may see a rate cut sooner than we originally anticipated, like next month.
Yeah, they've increased
but I'm
the
seeing
odds
more headlines leaning that way.
Yeah, they can increase the odds considerably. They're still, almost slam dunk level at no change next month. But the odds of it happening have gone from like 14% last week to like 18 to 20% this week. And I imagine that it's probably those odds are increasing. And we're now at the point where we're at like 93% that we'll have at least one rate cut before September. The expectation for interest rate cuts is going up markedly, and that kind of gets us to the point of, oh, Lord, we may have some disappointed expectations come the July Fed meeting, which I never look forward to because that generally means a big seismograph on the markets.
Well, it does, but there is, this market really kicked back up for the tariffs, but you're right. We could still see more tariff talks, right? Which is going to impact the markets. I was looking at interest rates when I got back, looking at things, and the 30-year Treasury has dropped quite a bit. I mean, it's down to 4.75%. Remember, last week and the week before, it was bumping its nose on 5 still.
Absolutely, yeah. The interest rates have settled down. I tend to track the 10-year because I can compare it easier across nations. But we're down to 4.219 this morning or thereabouts on the 10-year bond, and that starts looking normal, and that's kind of a scary term to use in today's world, isn't it?
Yeah, it really is, Dave, especially when we talk about interest rates. So, what is normal when it comes to the Fed rate? That's what's going to be interesting to finally see where does that land and where do we end up long term on the Fed funds rate?
Absolutely. Not a lot of news going on so far this morning. Like you said, the construction spending numbers could be market movers. Other than that, I pretty much got Mr. Obvious as far as headline stuff's around there. The BlackRock folks say that rising government debt is the biggest risk to U.S. markets. Kind of a, well, duh. And a report came out this morning saying they'd surveyed all the junk they could find on Amazon, and Chinese-made goods have been going up in price faster than inflation on Amazon, which, like I said, comes under that hello, Mr. Obvious, right?
That's right, exactly. So, and then of course we still got the Musk Trump spat going on, which is hurting Tesla again today, down almost 6% this morning with Trump saying, hey, maybe we need to investigate all the, contracts that give Tesla a step up when it comes to cost cutting measures. And so that's really putting a little bend on Tesla stock price this morning.
Yeah, of course, then Elon will threaten to shutter SpaceX help with the space program and strand astronauts up at the space station. And we're going to have that silly exchange going on again, I'd wager.
Probably so. Hey, Hasbro got upgraded by Goldman Sachs from neutral to buy. So it's got it trading up about 2% this morning.
Mm-hmm. Any other tidbits you got from the companies out there?
Not really. I mean, there's a few upgrades and downgrades. Like I said, Hyatt Hotel got upgraded by Raymond James in their view. We've got just looking at if there's any actual companies that we recognize. That's probably about the only two companies that recognize that got some upgrades.
Okay. The Hyatt upgrade probably shouldn't be too much of a surprise given the fact that the TSA is already reporting record traffic at the airport from last weekend, and they expect it to be heavier this weekend during the 4th of July. We aren't cutting back on our travel all that much. We might be doing Motel 6s instead of Hyatts, but we're still traveling anyway. Resetting the table, solid green ink yesterday, pretty much worldwide. 45 minutes before we open this morning, what are we looking at?
Well, we're going to open to the red. It looks like this morning, Dave. At least right now, we've got the Dow Jones Industrial 30 down 1/10%. S&P 500 is down 1/3, and the Nasdaq 100 is down a little over 0.4%. So we've got mostly red, like I said, red across the board there. Silver, though, is expected to jump up 1.6% right now, $36.42 an ounce. Gold's up about the same, 1.85%, $3,369 an ounce. Crude oil is up as well, almost 1% to $65.73 a barrel right now.
All righty. Looking at the overseas market, everything except for Hong Kong and Japan was solid green over on the Asian rim. The mainland Chinese markets up about 1/3% on average at the morning close. On the other hand, Europe is still hacked off at us for that Canadian tiff that we're having over their internet and cyber services taxes, and they're seeing that as being a potential shot across the bow in our negotiations with Europe. Everything is off in the European community halfway through their day. Average index is down by about 0.5%, and it's been trading in the negative ever since that weekend story about Trump cutting off our negotiations with Canada again. Trying to get a beat on what this does for a retirement takes some planning, takes some effort, and it takes a pair of expert eyes. How do I find you to get my plan back on track, Phillip?
David, give us a call at 863-382-0037 to schedule their core retirement design, where we'll help them design the retirement they always dreamed of. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And newstalk730am.com, because we stream it too. My friend, I will talk to you tomorrow. It's good to hear your voice again.
All right, buddy. Take care.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.